In this video, traders, we're going to look at when bottom picking works. Stay tuned. Hey traders, a very warm welcome to you. Okay, so bottom picking in a trading perspective is when we have a market that is pushing to lows and we buy assuming that it is the bottom of that move. And we've got two camps. On one side, we've got guys who are saying, you know what, don't ever do it. I don't do it because I don't make any money out of it. I prefer to make the meat in the middle. And on the other side, we've got guys who are saying, you know what, this is how I make my money from picking bottoms and tops, and I'm very good at it. Paul Tudor Jones sits on that side, other hedge fund managers on that side, which is the best side to sit on. Now, let's have a look at when the good times to consider bottom picking are. I'm not going to go into the kind of strategies of it, but I think there are times when we can filter out opportunities that may present themselves as good bottom picking opportunities. Now, bear with me on this one. This looks very simplified, but I'm just using it for illustration purposes. Okay. What we definitely want to avoid are chugging downtrends. They are very difficult to pick bottoms in. Same with uptrends, very difficult to go short into because it's sluggish, it's slow, it's plodding. There's just supply-demand imbalance that's staying there. It's very difficult to pick the point where we're going to do it. So that's primarily one to avoid. Now, this shape is actually obviously you have this shape in extreme trends as well. We'll talk about those in a second, extreme moves. But I want to kind of say, hey, listen, bottom picking on chugging downtrends is challenging from a perspective of, okay, you could scale in, but that might go on for a long time. You have to sit through that. So I would avoid those. Now, bottom picking in a range bound market is different. Now, obviously, these are two extremes, why I put them on here. If we've got a range bound environment, we know it's quite prudent to be buying at support levels. I don't really consider that bottom picking unless we've kind of got a larger range and we're still doing that. But often we'll get this plugged into this. So let me rub this out and let's show you what I'm talking about. So no, we don't want to get involved in any bottom picking when the trend is just chugging to the downside. However, if we have a chug to the downside that starts to perhaps find some support, that could be a bear flag. However, if we've had 4 or 5 pullbacks before that, we seem quite extended, it starts to kind of find a little bit of a base, maybe tries to go through, maybe then pushes back up above that high. Now you can structure some kind of bottom picking around this. You've seen it's at a low. Yes, you're not right at the sweet spot of low. We'll talk about that in a second, how to grab that one. But you've kind of seen some supply demand shift. Rather than just hitting it straight into these lows here, you've waited to see. Sellers have backed off, pushed on. Now, are the chances of it going to lows high? Yes, they are. And this is kind of why you've got the risk reward ratio on your side with this, because you've got a 10 to 1, 10, you've got 10 here, and kind of one is your risk here. So you can play those, have a couple of those and be wrong and eventually get it right. So looking for that range bound structure at the end of a trend, if that makes sense. So you use what we would always be bottom picking at, which is just really fading the range. But that in place of the downtrend at the bottom, we could get involved with it. Now, of course, like I just mentioned, that looks like a bear flag, and you've got to kind of, you don't want to do this on the first push down. You want to do it when you feel, hey, we've come 5, 6, 7, 8, 9 days in a row. This is now down, I don't know, 200 points on the day. If we're talking the Dow, we're now down 350 here, let's say. We start to kind of form a base. We see some explosion. This pushes down, then we see explosion. You know, where do we get involved in that? That might give us an opportunity. Okay, another way we could do it is to look for extreme flushes. Now, this is, it can be considered dangerous, but you know what? The way I look at trading is, it's all dangerous. You could have the most perfect trade in the world. Oh yes, this is really good. And it still stops you out. You still lose money. As long as you're taming the volatility, if you like, with size, and you've got your stop loss there, you're still losing the same amount of money. So you take whatever trade you like, as long as you're managing the risk, you know, in a good way. So let's say you've got this kind of drive lower, whether that is a daily, whether that is an intraday chart, but you've just got that extreme flush. It's come a long way already. Now it's extreme flushing. How do you get involved in that? The first thing you're doing after that extreme flush is you're saying, I want to see now a complete shift, a massive shift. I wait, that could go lower, 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 keep going lower. And then all of a sudden, you're going to see a massive shift in buying. As soon as you see that shift in buying, that's your long entry. That's your bottom picking. That could be intraday. That could be after, multi-day if you're swing trading. The point is you're waiting just to see somebody commit. You're close enough to the bottom to give you a decent risk-reward ratio. You're close enough to the bottom as well to be able to structure a stop loss, because the danger, of course, if you're buying right at the low is where's the low? You get tempted to keep dragging it down. After you've seen some kind of evidence, supply-demand imbalance has tipped up, yes, you can then get involved in that and structure a trade based around that low. So bottom picking can work very, very well there. Now, those are extremes. Let's move on to kind of normal market conditions. Normal market conditions, we need to look at something like our average true range, whether that is our weekly average true range, our daily average true range, or whatever. What is the normal range for this thing? If we start then, assuming we're not in a grinding trend, they assume we're kind of just stretching things. If we start kind of probing, two lows that are at the upper end of the ATR, let's say that's, 150, let's say we start doing 160, 170, and we're in the kind of right time period, or let's say weekly, that's that, we've got no catalyst, there's no external influences, then you've got the odds a little bit more on your side. You can have a little nibble on the long side. You can use, some kind of structured stop based on that, whether that's a finite stop or whether that's percentage based stop, however you structure it. But the point is you're waiting for something to suggest that, in normal conditions, we might rebound a bit. So bottom picking becomes a little bit more of a favorable strategy than just going in, it's heavy down, it's only down 75 ticks on the day, or it's only done, X% in the month, it normally does double. You kind of got nothing else on your side. So that's something to use in like normal market conditions. If we're in extreme market conditions, you've got to be careful of that, because you could do, 10 times ATR on a day that's going crazy. And you're saying, well, it should only do 1 ATR. And of course, it's just an average. But the other thing is in extreme market conditions, looking for that flush and that final exhaustion. But I like to see evidence first of it pushing to the upside, whether that is, say, on a higher time frame or lower time frame. And then going back to the first one, which I've rubbed off the board now, which is waiting for the trend, the extreme of the trend, rather than just kind of picking it, then seeing some kind of evidence. It's a lot of these are seeing some kind of evidence of a bottoming, some kind of evidence that something is happening. Maybe sellers are backing off, and you're looking for that little evidence. Yes, you're going to get stopped out often on these. That's why it's important to manage the risk. But when you get it right, that's the sort of thing that will just rip to the upside, will give you an immediately good reward on it. And you can choose how to manage it then as you see fit. Do you add to the position saying, this is the bottom of the trend, got a multi-day trend, I'm going to get extra aggressive now. Lots of people will be piling in on this, or how do you manage it? How does it suit you with your trading plan? All right, guys, that's bottom picking when it works. Thumbs up if you like this kind of stuff. See you next one. Take care. Goodbye.